Hello everyone, this is Trader AG and welcome to part 2 of my whiteboard series. In this video I will be covering these three topics on the screen right now: volume, delta, and cumulative volume delta. This will probably be a long series because I was meant to do the order flow and exocharts analysis this video, but I said, these three topics right now are the main focuses before we get into exocharts. So I said, in a year's time, if someone sees my video and he comes across it, I want to make sure that it's something that can actually help him. And for my viewers right now as well, I want you to know what I'm trading and what are the some indicators or some concepts I use. And these three are really important before we get into the Excel charts usage. So let's get started. My last video was last week and it was about range trading and manipulation. Right now, after that, I think the main topics to cover is how these manipulations happen. And most of these happen through volume, right? So let's get started on volume. I think from these three concepts, if you're a beginner, the concept that you're most aware of is volume. Well, let me explain it quickly. As you can see, this is a candlestick, and from it being green, you can understand that it's a bullish candlestick, which basically means, let's say, let's put it this as a daily time frame candlestick, right? This means that it has been a day of trading, and we can assume that there has been in total 20 million people who have bought Bitcoin, right, at some point. And, well, in the same day, there was, let's assume, 10 million people who sold Bitcoin. Well, this would in total get us to, let me choose this, 30 million volume. This is the base concept of volume. It's in total sellers plus total buyers in the market, right? And, well, that's an easy concept. But what happens when we actually subtract these things from each other, right? Because we can do this as well. Well, when we subtract these things from each other, what remains is plus 10 million. Well, this is what we call delta. Delta, I believe, is the most important term you will see in trading because it explains to you how a trading day finished. And this is really important for us because if a day of trading ends as a bullish day with plus 10 million positive delta, that means that the market has said that the fair price of today was higher than yesterday, right? So that gives you a perspective on what might come in the future. So let's put this here. Basically, delta, volume right now is the total amount of buyers plus the total amount of sellers. Well, delta is the total amount of buyers minus the total amount of sellers in a certain given time frame. And this value, delta, could either be positive or it could be negative, right? Because it could be negative 10 million as well in a day where we had a bearish ending of a day. Well, it will be a negative delta because the amount of shorts will be higher than the amount of longs, while volume always is positive because it is the total amount of trading that happened on that given time frame, right? So that is really important. Delta is really important as well because it actually gives us the concept of cumulative volume delta. What that means is, well, let's put that into perspective, right? Basically, there are two types of trading happening in every market. One of them is the market orders, and the other one is limit orders. Market orders means, let's say you want to trade right now, right? Currently, the Bitcoin is trading around $60,450, right? If you were to go into Bybit, Binance, or whichever platform you use, if you were to open a short or long, you are buying the market price. But if you were to say, okay, we have a range from 61,300 to 58, 59, 576, you could say, okay, let me put an order above these highs as a selling order, right? I want to short above these highs. If you were to put, let's say, one Bitcoin short above these highs at 61,400, right? Like this would be a limit order. And what we should know about this is most of the trading that is limit orders are done by these animals. These are whales, right? Whales means big players of the market. And most of the market orders are done by, well, this is me, and this is you, right? We buy market because we don't think about fees that much, even though it's important for us. If we open a trade, we don't lose $1 million per trade if we open into the market, but these dudes do. So they say, well, I'm going to open limit orders. So that is one thing really, really important to have in mind, right? So what cumulative volume delta means, it is the market order price. And you might be like, what the fuck does that mean? Well, let me explain. As you can see here, right? Well, this is our current price. This data, this chart is got from ExoChart, which I will explain in my next video in the part 3 of the series, of this whiteboard series. This is our current price, right? And this lines, as you can see, is called CVD, Cumulative Volume Delta. What it means is, it is the price where what happened without the limit orders. This is really important for us because this shows us what the market sentiment is without the big players. So what the retail is thinking of price, right? So as you can see, the price was here at this time, same with here. Price went lower and the cumulative volume delta went lower as well. And this is a fairly, common occurrence. Well, sometimes it isn't like this. Sometimes, maybe, a couple times a day or once a day or once a week sometimes, right? This is what happens, right? Like it happened yesterday at $61,000, where we have a certain price here, as we can see, right? And cumulative volume delta is here. When the price went down, as we can see here, right? I will mark these levels as well, as we can see. No, I'll do this with this one then. I need white. Yes. So as we can see here, the price went down compared to here. But on the cumulative volume delta, we can see here, the price went up, even though the price on the real price went down. Well, what this means is, if the chart below, this one, means that this is the market order price, well, someone has to be holding the price down, right? Because if someone wasn't holding the price down, the market orders would push the price up. Well, they're not being pushed up because the limit orders done by these animals right here are pushing the price down, which basically means the big players and the whales are shorting the market at that current time. Well, what happens? The price pushes down, even though retail wanted to see the price high. This is a really common occurrence because in most cases, if the big players want the price to drop, even if the retail wants the price to go up, the big players will absorb the needs and the wants of the small players. That's a really important sentence, right? The big players will always absorb the wants and needs of the small players, right? So another example, actually, from 4 days ago. Today is 18th of September, 2024. This was yesterday, I believe, and then, well, this is another one from Saturday night or Friday night, something along those lines. Oh, this is the 14th. Perfect. So what happened here is, as we can see here, well, the price was going down, right? As you can see, we're not making new highs here. We're actually making lows and lows and lows. Well, what's happening in the CVD? As we can see in CVD, we're making highs, right? This line is lower than this line. Well, on this price, the price is actually going down, which means, again, the big players are selling the orders that the market is buying, right? The small players like you and me are buying the price, while the big players with limit orders are selling it, which is the easiest way to understand what the big players are trying to do in the market. This price action here is what happened exactly in here, right? And as you can see here, well, it was pretty obvious what happened. We had a push down, and, well, as you will see these things more, you will be, less surprised, because this is a really common occurrence where the market participants, the market price buyers, are usually in the wrong if the limit buyers are wanting a certain price, right? Or they're wanting a certain direction, right? So that is what cumulative volume delta gives us. It gives us a perspective on what the whales want from the market. And it's the easiest thing to trade. Because if you're hitting an important level like we did here, right, at 60,500, we were hitting the golden pocket of the move, of the overall move. And as we did that, after we hit it, on our retrace, on our small range, the small players were trying to buy up the market. They were thinking, okay, we are above $60,000, which means we have to go higher. But the big players were pushing the price down. And what happened is, well, once the small players get absorbed by the big limit orders, the price pushes down. Again, what happened yesterday? We were at 61,400. The retail said, okay, we're above 61,000, we have to go up. They tried to push it up. The big money was buying it, but the big money was selling it. And what happened is, well, we pushed down, and after this, we actually pushed down more. So, really, really important stuff. Another really important thing is this concept of cumulative volume delta should only be used on small time frames. Small time frames means 5 minutes, 15 minutes, 30 minutes, at most an hour. Because above an hour, the concept will be on a bit too big of a time frame. And what I mean by that is, let's get this frame, right? This is a monthly frame, as we can see here. And what it shows here is, well, as you can see on cumulative volume delta, we have been making lows, while the price have been making highs, which is actually bullish. But the problem with that is, let's say the price does this, right? Boom, and comes down here. Well, even if we're here, the cumulative volume delta will still be bullish. Well, what if we come here? Well, it's still bullish. Well, what if we come to $20,000? Well, it's still bullish, right? If you're an investor, and if you're investing for over decades, or if you're investing for years, yes, these are good buy spots, because it shows that the cumulative volume delta is going down. But if you're a trader, if you want, if you're not holding a position for over 2 years or over a year, if you're day trading, or if you're scalping, or you're swing trading for a week or a month, these are not that useful, because the price can easily come down to $30,000 and still be extremely bullish on cumulative volume delta. So this concept should only be used in 5-minute, 15-minute, 30-minute charts, or maybe even 1 minute, right? Those are the time frames I use it. So I hope these concepts were easy to understand, because these are really important for me. And here's an example actually for us to understand how the CVD works. So basically, let's say on the real chart, we are making high, low, higher high, and we're making here another low, right? This could go down here, or this could stay here and push up. If we see a cumulative volume delta doing this move, as we can see, high, low, lower high, lower low, while the price is making a higher low, this means that the price, right, is being, the shorters of the market, who are the small players, are being, oh, sorry. Well, they are basically being absorbed. Well, sometimes I'm dumb, sorry for that. Absorbed by limit orders, because the market price should be lower, as we have in cumulative volume delta, but it's higher, which means the limit orders are buying up every market sell. And in most cases, if this area here, is a support level, this will give us a good trade. So that's how I basically trade cumulative volume delta, right? Especially if we mix it up with delta and volume, this becomes, a really, really high win rate perspective. So that's what I want to teach you before I teach you order flow and Excel charts. My next lesson will be about both of those. I will give you templates. I will explain to you time, price, opportunity. I will explain to you naked point of controls and give you a framework on footprints. Those are really important, but first of all, I wanted to just give you an idea about how I trade and what these levels and what these concepts are that you will see on my part 3, right? And I uploaded this video one day after I said I was meant to upload this on Tuesday, but it's a Wednesday, so I said, okay, I'm sorry for that. I had a traveling day yesterday, so I didn't want to make a video tired because again, I want to make sure that this is the highest quality I can give. And well, because of that, I want to say sorry. And well, it's a way of saying sorry is I will have this quiz for the people that's watching this video, right? I want you to see this chart and I want you to tell me from failed auction 1, failed auction 2, failed auction 3, failed auction 4, which one of these areas, right, you would get in a position in based on the data you see from the CVD, right? Here's a CVD chart, as we can see, and here's a real BTC USD 15-minute chart. Which of these areas would you get in a position? Write it in the comments, and one of you will win $20. Of course, put in your BTC wallet as well. Actually, USDT wallet. I will send it through there. I will choose the one who got it right. And yeah, this was the video of the day. I hope you understand what I mean by these concepts. And well, if you have any questions, you can send me a DM or send your comment on this YouTube video. I will be checking in with you again this week for the part 3, and also I will have a market update either tomorrow or Friday as well. So thank you so much for listening to me, and I hope you have a wonderful day.